What's up, guys? How's it going? Give me a second. I will get started. How's the background noise? Should be very low at this point. Yeah, I like this intro too. This is off of YouTube. This is a non-stop techno radio mix, and I think it's copyright free, so that should be good because that's where I run into trouble. Although since the videos aren't technically monetized, I think I still get away with having music that is copyright protected, but you get just like minor infractions against your channel. If you're monetized and you're doing that, I think that's where you lose your channel. All right, sound is good. Cool. Let's change the screen real quick. Give everyone a minute or two. Yeah, so that graphic was done by, I believe, her profile's It's Senpai Art. And I just went to her with an idea, some muses, some inspiration, said what I would like, and she came back to me with that, which is, in my opinion, it's awesome. So, and it's not Zed Run. She actually constructed the horse herself, created all the animation and everything that you see. So, all right. Give it another minute. I have this stream running on Twitch and YouTube. So I finally figured out how, I think I have figured out Streamlabs. No more hiccups, no more sound issues. Got a good mic. I have a good webcam as well, but I don't know. Sometimes I feel like hopping on the webcam. Sometimes I don't. You're all familiar with my face at this point. I share enough pictures and doxing type of things on posts on Twitter. Yeah. Yeah, so funny story about the water, Amos. Let me see. Did I miss any other comments? So the water, the grass. So when we moved into our house last year, you know, I shared pictures and there's like ongoing banter back and forth about my dog and the spots that she left on the grass because we got a new sod job. You know, we had moved into our backyard, you know, into our house, have a really nice house right on the water. But the backyard was absolutely atrocious. Like crazy undulations all over the place, ditches, no real grass. So we had that whole thing graded. We had sod put in. You know, it looks beautiful. And then the dog, I think the dog from having a purely raw diet has maybe high uric acid or ammonia. I don't even know, right? I'm not going to speculate. I'm not smart enough to figure that out. But for some reason, her piss like burns the grass almost instantly. Like she pees and then a couple hours later, it's yellow. So she ruined the sod. So we had to have that all fixed. And then the side yard, we just had resodded. So we have a, you know, one side of our house, we have a big garden and a big pathway. And I had that completely redone. This was 2 weeks ago. And now there's like 4 huge Frisbee sized spots that are, you know, it's beautiful green grass and then fucking mustard yellow. There's nothing I could do. Like, I'm not going to give, people say, you know, give the dog some kind of pill in her food. I don't want to fuck with her health. Like, I don't want to, for the aesthetics of my yard, like start making my dog's diet, engineering her piss to be a certain way. So it is what it is. I'll just have to pay extra money to have that grass fixed more frequently. All right. So thanks for tuning in. It is Tuesday. I woke up this morning. For some reason, I thought it was Monday. It's been kind of a hectic last few days in our household. My wife has COVID. So we spent the night in the hospital, and that was on, I don't even remember what day that was on. Either that was Saturday or that was Sunday. I don't know. So it's been kind of like Twilight Zone here. I'm fine. Haven't tested positive, not sick. Super vigilant about like if I'm around anyone sick or if I believe that I might be getting sick, about attacking it as fast as possible and doing everything that I can to be proactive about putting myself in the best possible position. So start off the morning with sauna, hydrate, drink a bunch of greens. You could imagine. So pretty hectic, but back to the market today. I don't really trade too much on Mondays. Sometimes I do. For the most part, I don't. My performance is kind of wishy-washy on Mondays. So Tuesday is my good day to trade. I am in an ETH long right now from, I think my entry was 1376 or 1377. I'm re-exposed a significant portion of my portfolio to BTC that was hedged. And yeah, we're going to go over those two charts. We're going to take a look at the ES. Shout out to, real quick, if you're not subscribed to the channel, go ahead and hit the subscribe button, hit the like button. Check out that artist on my Twitter page that I shared. She's awesome. She's phenomenal. I hope she gets a lot of work. And also shout out to my partners at Phemex. Real quick, I hate shilling, guys, but I've been on the team now since the inception. Phemex now has flipped Bybit in terms of overall 24-hour trading volume. This has to reset. And the BTC and ETH pairs are more liquid. And that's important, right? Because that has to do with, that'll immediately impact your transaction costs. They have better trading fees than other exchanges as well. So now that it's deeper, and I'm not like, I get a couple comments from people, listen, if you don't like the exchange, you don't like it, but you can't say that right now there aren't some weird things taking place on exchanges where some exchanges did lose a little bit of volume to others. Phemex has grown a lot, and then another one, BitGet, has also grown a lot. So I don't really know much about BitGet, but I know a few people who trade there, and it appears to be that it is legit. So this market is constantly changing. It's something you should just get used to. Real quick, though, the trading battle competition, it's going to be starting in 5 days. I'm actually going to be doing this. So you guys remember my last performance, the last two competitions, I believe. I trade normally in the beginning, so I'll work up an account. I think I was up to like 80 or 90%, just trading how I normally do last time. And then I start to swing for the fences, and I'm like all or nothing, liquidation or, zero or hero. And last time I ended up liquidating myself. But most people get kind of degen with these competitions. I just like to trade, be part of the team, and then I'll swing hard if any kind of opportunity presents. But if you want to join the team, here's the link. So I'll add this in the chat. Okay. But feel free to join. It should be fun. Okay. I think that does it. Let's change the screen real quick. Main. See if I miss anything in the chat. The links are below, by the way, for the exchange. Also, as a reminder, the course, the market profile and order flow course, we made that free. So we announced that it's finally free. It's been free now for a lot of people. I've been giving it away, but we finally publicly made it free after figuring out how to. It wasn't really difficult, but I just thought it'd be difficult to figure out how to get people onboarded for free and to remove all that paywalling shit. Anyway, let me just look at the chat and then we'll get started. Thoughts on ETH versus BTC. Seems to be outperforming to the upside. Smaller drawdowns when BTC dumps intraday. Someone is very confident in ETH because they added quite a significant amount of long positioning today. I think this is upwards of 400 million worth of contracts on ETH perps. So someone is confident. We'll take a look at that in a second, though. Let's see. I don't have anything against Bybit. Like, I think Bybit is a great exchange too. Here's what I do have something against. I'm against when people say things like, there are certain incumbents that are always going to lead, right? Or, not everyone can trade on Binance. Not everyone can trade on FTX. The idea that other exchanges wouldn't benefit from people not being able to trade on those exchanges is just it's silly, right? This market has constantly changed. I mean, if you told anyone that 3 years ago BitMEX would not be the place and venue for the who's who of the markets to trade, then people would call you crazy. But now it's kind of a ghost town. And I think that things will continue to change until we have, I don't know. I honestly don't know, until there are more rules in place probably to stop people from being able to access these exchanges, until maybe everyone has access in certain countries and regions to good liquidity, which is not the case right now. But anyhow, all right, so let's take a look at first the ES. I've had this range drawn out for a long time now. This range goes back to one, the obvious low, so most significant contextual level on the chart. Talked about it in the last 3 streams. I said 3,700 and above, and I'm bullish. So holding this level, that's all I care about. Talked many times about how the level would chop around, and the S&P is very choppy, and equity indices versus trading like the ES or trading the NASDAQ versus trading cryptos, whether it's Bitcoin or ETH or shitcoins, completely different lower time frame price action. That has kind of changed recently with the correlation, right? But still, there's a lot more zigging and zagging on something like the S&P or the ES than there is in BTC. The S&P can chop around a level for a long time and have you thinking it's going to go both ways and flipping your bias multiple times before ultimately choosing a direction. And it could look quite convincing in both directions numerous times before it does that. So we're back at sort of mid-range. This is a multi-week. This is a 5-week long composite value area high. It's a weekly highest close level for this previous consolidation before this markup. And we're accepted back within the region that was very accommodating previously. You just expect that we're going to return back to these range highs, and this is going to act as resistance. So from like 30, this is like 38.60 to let's say 39, just expect some kind of overhead supply and overhead resistance. This would be, or should be rather, a sticky area moving forward. If we just cut through it like butter, that's great. I think that price is getting towards the, I guess, point where I would say it's overextended or it's almost overextended. I think that it's more likely that if this is some type of bottoming structure, that we still see that there's some crap behavior. It's not like we've just shaken that. So if you're going to assume that the market is just going to continue to rip up from here, then you're assuming that a lot of things are changing. I think that a few things are changing right now. So big picture, right? Big ships turn slowly. But I wouldn't kind of balls to the wall long in this location. And I think that this location, this location is important because, this is just a normal market structure chart, or just a chart of market structure, said that backwards. But the levels that have given the S&P trouble by proxy have translated to trouble for BTC as well. So major contextual levels and mid-range sort of weekly structure and multi-week composite structures. You would expect that if the S&P was going to bounce off of this and find resistance, then Bitcoin would probably have some kind of trouble in the face of wherever, or rather wherever it was within its own market structure. But these have been working somewhat in tandem. It looks obviously completely different. The S&P has been a better instrument to trade, and this is why I opened up a futures account again. I'll go over that, some more details with respect to that. But just keep this level in mind. I think everything looks good big picture. I would be remiss to not say again that you have to be considerate of this level, but I think that the markets, as I've said for the last 2 months, are in the process of bottoming. And it looks like the S&P has done more of what I expected BTC to do. So I said that BTC back here, I posted that we're probably bottoming, but the low tick comes in Q4. We didn't get the low tick in BTC, but we got the low tick in the ES or the S&P. All right, so keep this level in mind, what that means for BTC. If we're back above 39 and we're doing something like this, right, holding this level, we're going to be looking to the range highs, right? It's the same idea as back here. Acceptance back within a very friendly, accommodating region. This is carved out, right? You would expect that if you accept back within there, you're going to do the same sort of behavior as you did previously. And that being said, extrapolating from that, if we re-accept outside of that range to the upside, and we have less trouble this go around, well, then it's more likely that we're going to do the behavior that we did down here, just one step up, right? Moving within, ultimately, just a larger range. But there's plenty of great trading opportunities right now. Again, it's not as obvious if you're just trading something like BTC. Alts, right? ETH, doesn't matter. They've been absolutely gross the last few weeks, last couple of weeks. It's not 2018 status yet, but it was getting there. So as far as BTC goes, a couple things to point out. And this is already stale. but it is useful. So we have, I have a few lines on the chart that are diagonals. I don't normally pay attention to diagonals, and we're going over the high time frame right now. Obviously, we'll go over the low time frame in a second. I don't really pay too much attention to diagonals, but when it's over the course of a much larger structure, I am a bit more keen to focusing on them, because if it is obvious, right, and it is lasting and it has been persistent over time, right, and these levels have been, they have been sort of governing or capping off price, then when it finally is obvious that we've broken these levels, I think you're sending the signal on the high time frame, especially when it is on a high time frame, to the largest pool of participants. So when you have some kind of rounded bottom like this, again, you could draw this on closes, you could draw it on wicks, you could see people draw it multiple ways. You could also just draw trend lines all over this chart and find how they work, even if you were to make this chart disappear. So diagonal trend lines, to me, they don't carry a ton of weight, because like I said, if I do something like this and then I just add the chart back, you're going to find points along this just through randomness, just through happenstance rather, that seem like they make sense, right? Like, oh, this was resistance, and then this was a deviation, but oh shit, it's resistance again. I think you guys get the point. Not as useful as horizontals, but anyway, longer time frame. This is a very, very technically driven market. I hate saying TA, but it is TA driven, and not primarily TA driven. But when you have this kind of obvious change, you have sort of a pylon effect. It does send a signal to, again, if it's on a daily chart, if it's on a weekly chart, that just by, orders of magnitude above lower time frame charts implies that there are more people that can get behind the trade, or rather just appreciate that setup, right? If you're a scalper, you can trade really anywhere. If you're a higher time frame trader or position trader, there's only so many places where it makes sense for you to get involved, where there's only so many places where the market can go to signify significant change has occurred. And I think that it's one of those that I want to keep an eye on. So anyway, the weekly setup right now is as good as you're going to get for signifying compression. So we've had, and again, I'll go over the weekly TPO chart in a second. From a candlestick standpoint, just look at where the market has spent most of the time opening and closing, with a very tight region. So ATR dropped off, realized volatility dropped off, everything dropped off. Volatility was crushed. We had an inside week setup right here. So let me get rid of these diagonals now. So your inside week, this is the first one in over 2 months. So what that means is this weekly high, this weekly low is inside of the prior candle structure. Now, normally this setup, okay, is kind of green lit when this weekly closes out, and then we have a trigger at the high and a trigger at the low. And a lot of times, really what you're looking for an inside day or inside weekly is at the break or acceptance through the low or through the high that is within the prior structure. You're looking at a pretty easy trade, and there's a few trades I call gimmies, and they're trades that have a very high occurrence or a positive EV. That is the inside day and inside weeks setup, and that means acceptance through the high usually leads you to, and sort of the textbook setup is to the prior high or to the prior low. So a break below this week's range, last week's range signifies a significant change within local or rather from local activity, right? Being very compressed, finally breaking out. A lot of times you're only looking at the prior week's extremes as a first target. And more often than not, that's probably what you should just consider. You shouldn't take this trade and start thinking well outside of it, right? Start thinking much further away. If you're taking the trade based on, that particular setup, it's dangerous to hold out for much more. Sometimes, when the market is this choppy, it just continues to chop. And if you hold beyond the high or if you hold below the low, the market just mean reverts and you end up, at break even or round tripped and even worse in the red. But I think personally, given the nature of the structure kind of breaking out of what has been this descending diagonal, and the market kind of rounding out, I think personally that this compression, right, is meaningful, but overall, the other weekly structures are really closely defined as well. So What I think is likely to happen is the break above, and this goes again to the same level we've been talking about now for 3 or 4 streams. 2,500, okay, likely takes us up to 22. A break below 18 likely takes us much lower. I personally believe that this is going to be breaking up. That's my opinion now. I think that the market is kind of doing that telegraphing behavior that I mentioned in the last stream. The market does tend to telegraph the move somewhat, especially when volatility is compressed. What I said was when vol is this compressed and historical volatility, realized volatility are at historical lows, when the market begins to drift in one direction, that's kind of the last sort of ominous sign that you're going to get if you're on the wrong side, if you're fading that move, that it's time to get out, right? If the market slowly becomes accepted higher or slowly becomes accepted lower after you've reached sort of historical levels in low volatility, or you've reached lows in terms of volatility and they are on par with historical lows. So I personally believe that this is drifting upward and it's going to be expanding upward. I mean, if we look at this chart and then you look at something like this, probably makes a bit more sense. The last, we're talking 1, 2, here's your inside week right there, inside of the prior structure, but the last 1, 2, 3, 4, 5 weeks have had pretty much the same region in terms of value, right? Price has not been able to accept outside of this, but needless to say, it is very accepted here. So fair value is between 18.8 and 19, we'll say 19.6, 19.5. So if the market is able to trade above these levels, even, impulsively or not, and we see that volume is coming in and price is not having trouble at these new higher prices, then just expect this to continue. And what that looks like is more locally, it's probably something along the lines of, because we've now tapped into this naked point of control. So from a prior stream, we talked about this. If we could trade above these 19.9 sort of 20K highs, and it's going to be easier to see it on this. Here are the last 2 weeks. If we trade above the last 2 weeks highs, I don't see a reason why we would not extend back up towards this pivot right around, we'll say between like 20,003, 20,004 as a reasonable area to expect price to extend to, even locally. So this little gap. All right. Above there, you are looking at, again, I think a very significant level. I do think that, again, the market is shaping up to move this way, but giving each level the respect it deserves, if we're able to accept outside of this complete range, so not just outside of value, which is more or less located here. I'll show you a little bit more specifically why these levels that I'm mentioning are useful. Okay, so here's the 19.6 to 18.8 value area. Let me open these again. Okay, we're accepting outside of that. All right, I think it's likely that we revisit 20,003. But if we accept outside of the entire range, so the extremes, not just outside of value, because what has happened is the price has been very accepted within this region. Any effort to leave it has come back to the mean right here, right? That's not an M. That's not even an M either. This is an M, right? So any effort to move outside of this has come back. But if we accept outside of this range completely, to the upside in particular, it's kind of the same to the downside. This whole region is, for the most part, for all intents and purposes, a gap. So it's not necessarily a pure gap, right? In that you have all single prints, but you could see that there's not really much that is transacted there compared to previous structure. So the buildup leading up to that, so that weekly profile to this weekly profile, the one leading up to that was more like this, and the move back down was more like this, right? No real kickback in an area where there had been some on the way up. So my point is that if we accept above 20,005, 20,006, there's not a whole lot that stands in the way from one side to the other, right? So from 20,000, 2005, 2006. This is the area where I'd start to look for this behavior. To 21.6, 22 and above. Pretty much, it's kind of a gap. And I've described this many times before, building a structure. This is a good way to describe it. I will, and other people have described this as well. If you have a structure that is balanced, that means that the market has been relatively accepted in one region. You're filling this area out, right? This kind of structure is meaty. If you visit it from the top or the bottom, you expect that running into it, into the fat portion, is going to cause some kind of kickback. When you have a structure that is imbalanced and looks like this, those are profile. This is a profile. The only areas that are fortified, and only briefly, are the high volume nodes within there. If you imagine this as any kind of structure, let's say you're building a cobblestone retaining wall, would you want to stand on the top of a structure that only had bricks? Let's say that this is your structure, right? Maybe it has bricks on some whole part of it from the top to the bottom, but then one portion of it, this is the top, has only 3 layers of bricks and big gaps. No, this side of the structure is much more likely to collapse. So any kind of structure that we return to that has gaps is likely to give way. Just imagine that a structure like this doesn't have much scaffolding, and structures like this are clearly fat and meaty. So they're fortified, right? Whereas this is not going to give you much resistance on the way back up. And if you look at like the daily profile of that, going back to that day, you'll see, one sec, what it looks like within that day. It's pretty weak looking. So there's the profile from that day. So you have small periods of consolidation, but for the most part, these regions are not built up. Those are empty spots within our wall. And I've described it, talking about a tree trunk and building a structure that is really thin. There's a lot of different sort of analogies that you can use to describe this. All right, so let's go back to TradingView. So breaking up now, right? Again, I still think we're dealing with an area that needs to be respected, and we're closer to the middle of the range. So this signifies big change to me. Acceptance above 20,005 is more significant than anything that we're seeing locally here. All that takes place within here is not necessarily worth getting very excited about. I'm in short-term trades right now. I unhedged some of my portfolio because I do think that we are in the process of bottoming. I've done this a few times, right? Has worked out so far. But more meaningfully, this is the real change, right? This leaves us with a much larger move. And you could look at other tools, right? Some people might look at moving averages. So for example, put on like a 20. This is a 20 on the weekly. Bull bear line in the sand for dynamic, from the standpoint of dynamic support and resistance. So the 20 period in trending markets is what I use to identify who is in control, right? Also to identify how strong the trend is, how far extended are we from it? Are we pulling? If we're pulling back to it, it's kind of like a value area also to get involved with the trend, but still sitting under it right now. But I do think that, again, this kind of adds up. There are 3 points of major confluence, in my opinion, around this 20,500 level. So you have breaking out of the last 5-week range. You have acceptance above, or could be acceptance, right? We haven't seen it yet. The 20 period weekly moving average, and then ultimately a break outside of this running diagonal. I think that those things are signs that the trend is at least done moving down. And we know that this market, when it stops moving in one direction, it grows heavy in that direction and falls back on itself in the other direction. So this is probably easier understood when things are moving up, right? It's getting heavy, losing momentum. Very hard for crypto to stay where it is. Usually you're unwinding that positioning. Same thing happens at lows. You know, with a futures product, you're having people bet, right? For every long, there's a short. So if anyone is opening up a long right now, there is someone on the other side betting that the market is not going to go that way. So the fear trade works both directions. So I say fear trade because normally fear is in the market crashing down. But when the market has been crowded in one direction in a move that has been down, the fear trade is up, right? The crowded trade, if it becomes down, right? If it becomes the short, the fear trade is back up because you have all those people that need to close out their positioning, unhedge, redeploy, chase the market, yada, yada, yada. So I think this is looking good, high time frame. But I am saying that, you know, with the caveat that not much has changed yet, besides locally within the last 2 weeks, finally breaking out of the last 2 week range. I would, let's see, is there anything else I want to say with BTC? Let's go to low time frame. We'll go to Sierra for this. Let me just get rid of this. Something to keep in mind, and I mentioned this earlier, one-sided move so far for the S&P. So if we look at the open today, it's just been one-sided off of the open. So it's not, you know, I talk about this setup a lot for BTC, where you have, you know, something like a 4, a daily, a weekly candle that opens without a wick. So for example, something like this opens and does not put in a low. From the open, it just moves up. Right? It doesn't move up monotonically, which would be, you know, never putting in a new low on the way. But it never, you know, either way, it never makes a new low. It never makes a low after the open. So a lot of times you see that. That is more often than not going to be returned to. At the tops, at the bottoms, the same thing can be said. I'll put on the S&P chart on its own. For the S&P, I think not necessarily the same. I'm not going to extend this and say that it's as much in the bag as it is for BTC, but you could see that it has been the case previously that we've had these kind of strong drives on these dailies, and that has been kind of the end of the move. So just keep that in mind. But like I said, we're still expecting that this thing doesn't go straight up. You know, I know Twitter likes to think in terms of, is it going straight up or is it going straight down? Chopping within this area would be expected, right? As long as these lows hold, we're good. All right. So it looks like we're, again, good with BTC. So positioning wise with BTC and ETH, from just a funding open interest standpoint, both of these things got rocked this morning. So if we look at open interest for this BTC move, same with ETH, quite a dramatic rise. So for Bitcoin, you know, the Bitcoin value is like 49,000 BTC. Convert that to USD. It's going to be skewed though because the price moving up. You're looking at 750 million worth of contracts. Funding right now going more and more negative. So what I think is possible is on the way up, right? You've had a good amount of longs come into the market, but you also have what I think is someone who has been filling shorts passively. So what has happened is it hasn't been the case that for the moves down, and this is, so open interest is elevated, right? So for this entire structure, open interest has been elevated, but the moves down, breaking below prior market structure, have not led to significant wipes in open interest. So even stabs of the lows, right? And it's more egregious back here, haven't led to any kind of change in this. So that to me tells me that I think that a good amount of this open interest is also someone just chasing down asks and providing liquidity, either opening up a hedge or opening up a short, right? Or a few counterparties doing that. Because normally, if this was just longs, it could be longs, right? But if it is longs, then these are really diamond-handed longs, because any market move down would normally cause a decent puke, especially one that took out prior lows to which this developed. So more specifically, this low is where the large increase in open interest originated. We broke that low and nothing fucking happened, right? So, I mean, that was a 5% move below that. You would expect some of that positioning to dump. So what I think is that the pain is above here. So if you were to look at, for example, like a, just on average, this level on the way up, using this as the high because it is the high. So right around, again, 20,005, 20,003, that region, if you're above that, you're above where it's possible that whoever is getting involved here on the short side, where all of their invalidations reasonably would be, and you're in them rather at that point. I think that if we break above 20,003, 20,005, I don't think that it's just a technical sort of easy moseying from point A to point B because we accept it in the gap. I think that this thing could really pick up speed because there's going to be a significant amount of short closing if that happens. Now, ETH, we'll take a look at ETH. Again, my long is, I just marked this because it's on the exchange and I didn't want to dox all my stuff. But still sitting, obviously, well off my entry. Let me just put ETH BTC on this chart. Where is ETH BTC? So, I mean, if we look at this entire structure, I mean, I just look at this briefly to see if we're near any major pivots. As far as I could tell right now, we're just in the middle of this range for this pair. I'm more apt to pay attention to USD pairs. ETH is, let me get rid of some of these levels. It's a gap. It's a naked point of control. ETH has put in the higher low at the best possible region, right? Technical retest of a very technical level. So this is a really clean level back here. So far, a rounded retest. You know, how I've kind of gone back and forth with this thing. You know, when we put in the first move down here, I was talking about you wanting to see this move very quickly off of the level. When we kept moving sideways, I was becoming cautious, but not shorting because we were still above the range. But I was starting to say, hey, you know, this is moving sideways and drifting lower. I wouldn't be surprised if we accepted back within this range and move back towards the lows. No trade though, because we were still holding the level, but just a lot to think, you know, when the market is moving sideways and there's nothing taking place, the thing that keeps moving is your mouth, right? And your ideas and thoughts about what is going to happen, but market isn't doing shit. So your imagination runs wild. We ended up getting what was obviously a very clean structure for how many weeks is this now? 1, 2, 3, 4, 5 weeks. And again, this is looking like the first real breakout of this level. And it's putting in a higher low. Weekly chart, you know, same kind of idea as BTC. Just draw some lines. Higher resolution. Turn off the magnet. So, you know, I don't lean on these with a ton of strength. But again, like I said, these are the things that when you break, you're going to see a lot of people on the timeline sharing this, and that's going to inspire a good amount of positioning, in my opinion, especially when it's a high time frame diagonal. Now, I use diagonals on a low time frame also, so make no mistake, when prices are flagging, a lot of times I'm just going to draw the diagonal to get an idea of when they started to break out of that lower time frame compression. But high time frame wise, weekly structure, you know, the most obvious levels of importance on this chart sort of that 2K level is going to be very important. You know, very big round number if we get up there. I would not just kind of buy blindly through that level. But if we could hold this level right here, I think that's ultimately a level we probably revisit. Scale this properly. One sec. And then we'll manage it from there. If we're above 2K and we're holding 2K, the next obvious level is this 2400, sort of 2300 low. You know, we're not going back into a bull market right now. So I think it's really important to, one, mention that I'm just mentioning this because I just gave an if-then situation. If we break above 24, you know, 2000, then we're looking at 24. I'm not saying that we're going to 24 right now. But for all intents and purposes, this is looking like it has put in quite a fight here. And I think that 5 weeks worth of positioning unwinding is likely to resolve in some kind of follow through. You get more follow through for even less consolidation. So what I mean is we've had periods where the market moved 1 week down, consolidated for 2 weeks, and then the breakout of this has led to a significant follow through. So anytime that you have 5 weeks, what the fuck is going on? 5 weeks of consolidation, just remember that there's 5 weeks worth of people that are going to be wrong when the market finally does move outside of this range. Okay, in aggregate, them closing, new positions opening because something has changed, usually leads to a good amount of follow through. So I think at least we're looking, and maybe you could say even more reasonable is something like high 17s, 18s. Right? If we're going to draw this like that, you know, these lows, just where there was a bunch of confluence, market spiked up, but, you know, put in a lower high, sort of the same region as these prior levels. So it's more likely, I think, that if we're able to hold outside of this little consolidation that we finally broken from, so 5 week long consolidation, if we're able to hold above these highs, this low, something around 1420, that we put in a move back up to that 17 plus region. And yeah, then we can open up here, but I think it's more likely that I don't know if it's more likely, but I personally am going to be giving this level respect. So that 17 to 18 level rather than holding out for 2K. You know what I do though. I cut trades faster than the average person because I still think it pays to be defensive in this market. Does this all make sense, guys? So ultimately what we want to see is, one sec, this is 30 minutes, do like a 10-minute chart. We want to see that if volume is coming in right now, post breakout, that the market remains above those. It's not loading right there for some reason. So I'll just leave this chart on, expand this. Here we go. So what we want to see is that the market really holds these low volume nodes on the way up. So as the market is moving up and establishing value higher, and you're seeing that, you know, volume is coming in and is supportive of these new prices, and it's not necessarily new right now, but locally, right, outside of the last 2 day range, because this was a break from balance for the last 2 days. So you had an inside day setup as well. So that was this line right here. So inside day setup, yesterday's high, closed within the prior day's high and low. The setup is from yesterday's high to the prior day's high. So you got that from here to here. But accepting above this, right, so far, volume coming in. Ideally, you want to see that the low volume areas don't start folding. So if the market comes back down, that 19.7 level becomes a good area to bid for continuation. And that ultimately would be confluent with, you know, the last 2 day highs and the last little balance we've broken from. You know, worst case scenario would be the market moving up, establishing a lot of volume, or pulling in a lot of volume, and this is not a lot. This is so far, this is normal. and then losing that level, or the market moving up again, but on excess, no real increase in volume. Let's say your profile was, thin like this, and we've kind of just hit an air pocket, and there's no more willingness in part of participants to actually remain behind price. So this looks good right now. No reason to mention that reality because it's not something I'm currently dealing with. One thing to focus on though, and to now I think keep on your chart, is an anchored VWAP from this new positioning. So mind you, as I said, I think a good amount of this positioning is also people fading this, right? But still, if you have fresh longs coming in, and we're talking from, let's say, 19.3, and that is today, I want to put an anchored VWAP on that. And I'm going to put it on, make that red because it's very important. And it is the 25th. And the hour from that is 12. And this is obviously this year. All right. And the reasoning behind this is this is the, and one, this is just today's session. So this is going to be obviously isolated lower because this has been a move that's been extended off the low, just one-sided. But this VWAP is the average risk tagged on for today, right? So, it's your dynamic point of control, right? Where most of the volume was done. And considering there's 400 million to 500 million worth of contracts that have come in, just imagine that this was the average entry for them, which we know it isn't, but since it's spread out, it's probably a good, a good level to focus on. This anchored VWAP is the level that you want to see holds. The loss of that implies that more and more of this positioning is getting put underwater at that point. Sometimes this is going to be skewed further up. Sometimes it's going to be skewed lower. This has just followed price pretty smoothly. And again, this is the level you want to hold, because imagine that this is just where risk is averaged out. Imagine that this was your average entry right now. That is 19,562. How do you feel as the market's coming back down to that? You might begin to sell some. If the market's below there, you might close out your positioning. And if we're talking 400 million worth of contracts, just imagine that behavior behind that kind of firepower. That being said, this also is a good level to usually get involved for a first touch. So 19.6, 19.55, probably an area where if the market pulls back, we see some kind of bounce. And it's usually like good for a few ticks for some kind of intraday scalp. And I think that that's a reasonable area structure, right? It does pull back a little bit more than this low volume node, but it lines up with, the last 2-day highs. So extending this back, yesterday's high, wouldn't be abnormal to retest that level before continuing. What you don't want to see is, so here's the last 2-day range. So you notice this? This is a very inefficient move, right? This was your wall or your structure that was built with stones here, a gap here, and stones there. So what happened when the market stepped on top of that, started pushing against it, it crumbled, right? We accepted it and filled out. This is almost perfect, like a key, this low volume region. So this is a perfect example of market moved up, right? And I'll unfold this so you can see how that worked out. Imbalance move up, inefficient move up, leaves a single print region, leaves a gap. Market accepts back within there and fills it out. So the last 2 days, though, are really clean, I would say. One sec. So if I combine this, that 19.55 level, that anchored VWAP, is also the value area high for the last 2-day balance. Value area low. If we accept back within yesterday's range, and it's probably just yesterday's range you could use, go off of. If you accept back within there, you're probably just going to do what? You're going to come back down, test the mid, and then test the lows of this composite. And, you know, all reasoning for getting very excited is kind of, again, stifled. Make sense? Same area as standard 1 deviation on 1 plus standard deviation on monthly view up. Good to know. Good stuff. See if there's anything else that I want to point out. Another thing to focus on is that also the compared to price action, the CVD is not as aggressive as prices moving up. So one, that's going to say that somewhat buyers are tepid, but two, the buyers that are coming in are actually having an impact on price. So it's not taking as much to get price moving up. So there's no real sign of absorption or, you know, traders being offsides in any kind of egregious manner if we're looking at, you know, flow from that standpoint. And you're getting a good amount of buying come in, obviously, towards this high. It's the same thing with like the ES right now. Again, we had volume come in, built up though. It looks like it looks a lot healthier now, but left behind a gap. So you have this gap, and this is where the S&P opened. One-sided, leave behind this gap. I expect the market to pull back anyway, but so what was I going to say? There was something that I wanted to touch on. Okay, real quick. So I've reopened a futures account. So to trade the S&P, so to trade the NASDAQ, to trade energies, and, you know, possibly trade financials as well. Or it would be treasuries. Probably not, right? I'll probably trade mostly, go back to trading the ES and crude oil. So why did I do this, right? Well, one, the S&P is very technical right now. Very technical. BTC and the S&P are hyper correlated, right? There's brief periods of, you know, decoupling and lack of correlation, but for the most part, it resumes very quickly. Trading BTC, right? Leverage in crypto is more accessible to all people. So you could put up $1,000 and open up, you know, $100,000 position. Now you could do this with a day trading account margin with futures, but it's a lot of leverage. You're not really, well, no, it's actually, that's not a good example because that does work out mathematically. The trouble with trading futures for people is that they do have to put up more money initially. So a lot of people in crypto want to degen small accounts up from dust and are trading with small values. So the leverage that's available, the 100x leverage, the 20x leverage, is really attractive, and not having to worry about those margins, you know, compared to trading CME products. But the S&P is much more liquid. Much more liquid. All right. Also, the S&P, so trading futures, trading the E-mini, the fee structure. Okay, so if you're trading the S&P, one contract is $50 times the current value of the S&P. So, you know, that is right around now like $190,000. You know, 3853 times 50. We should probably just do the math on that. 3853 times 50, $192,000. Right? That's one contract. The notional value of one contract of the E-mini S&P is $192,000 right now. Okay. To trade that, to mark it in, you could be paying anywhere from 59 cents to $4, depending on what broker you're using, what you know, how you're accessing that market. Round trip wise, you could pay, you know, because of that, you could pay $1.50 to, let's say, $6 for a $196,000 notional position. For BTC, if you're trading that same amount in contracts, So it's just $1 is one contract. So 196,000 contract position. So $196,000 position. Regardless of how much leverage you use to access that value, you are paying 5 to 7 basis points to market in. So your fees are for the round trip in opening that position in BTC versus that position in the E-mini are like 50x. It's insane. So for two markets that are trading kind of lock and step, it's a waste of money to just trade BTC. There's obviously the S&P is more difficult to trade. You're trading against far smarter participants, far faster participants. You have the full depth of HFT that you don't have in crypto. It's not on the same level yet. But in terms of liquidity, in terms of cost, it is a much better idea at this point from a cost standpoint. So from a transaction cost standpoint, from both jumping the spread and actually paying commissions to trade the S&P. So needless to say, it took me a while to get back to doing this, but I am at this point, I can't believe I ever stopped. I should have gotten back to trading this sooner. And I mean, this platform is Edge Clear. It's a phenomenal platform. I could very quickly switch these products. You can see how differently the NQ moves compared to the S&P. Just the NQ is just higher beta. It's lower lot sizes. There's more retail in the NQ, but it is great trading instruments. Again, for the two reasons that I mentioned, more than some other reasons, because there are cases to be made for the S&P trading less technically than crypto, having, again, tougher people that you're trading against. But it's just, listen, I've been looking at this DOM and looking at the S&P and looking at the NASDAQ compared to this, and it's kind of gross how still and stale this became. Does anyone have any questions? Now the trouble is, so here's an interesting thing. There's the E-mini and then there's the micro E-minis. So people think, oh, okay, the E-mini, yeah, I don't want to trade that large, right? I don't want to use that much leverage. So I'm going to trade the micros, right? I want to trade something smaller, more forgiving. The trouble with trading the micros is actually part of the reason that I just mentioned that made trading the E-mini attractive over trading BTC. So your fee to your, return ratio is going to be tighter on the micros. If you're scalping for ticks, you're not going to be returning that much over your fees unless you have a pretty strong edge, or at least a strong thought out approach to trading it, because if you're just scalping for small ticks in the E-mini, you could easily just burn up in fees. If you took the fees away, it would look like you're making money, but you're paying closer to the amount you're returning with those products than something like the E-mini regular contract. So dollar big move down today. That's why everything's ripping up. You could see the slight divergence between the S&P, BTC, and then ETH. So just looking at BTC, stuck in this consolidation, ETH leading that already. And the S&P compared to BTC, let me line these up a little bit better, moving down while BTC holds up. So this is a perfect representation, I guess, of beta. Although this has less downside capture than this move right here. I don't know why that profile is not loading. Everything looks good though, honestly. A lot of buying coming in up here. That's at that 20,000 level. Let's see if we could scoot up to 20,003. Now I'm long ETH, so I'm not, there's no, normally if this opportunity came, this would be golden, right? We would talk about, well, it's possible. I could just long BTC contracts, but I just re-exposed my spot instead. So I did that, what was that, 2 days ago now, but I longed ETH this morning, so I'm happy in my positioning. Although if we get some kind of retest of that or decent pullback, why is this not loading properly? It's bothering me. That profile is not loading, and I want to use that as an example. Weird. So you can use, I decided to go with Edge Clear's Edge X software, Edge Pro X. I'm using Sierra still for BTC, but I could have just hooked up everything to Sierra and traded the ES through Sierra too. I love Sierra, but Edge Pro X actually has everything for order flow traders. And even if you're not an order flow trader, it's just a lot more of a packaged, fully packaged product and complete product. Sierra has everything for everybody, right? There's a lot of customization that you need to do. So for me, it's honestly, I opened up the Edge Pro X, and I don't work for them or have any kind of connection with them. You know, Murad is great. Futures Trader 71 is great. But it was a just great complete package as it is. So just to give you an idea of, so let's see. No, I'll let this be. Give you an idea of what I'm talking about. Here we are. So this is not, so that's my, oh, you could see top right. Okay. So this is the setup. So I have it broken up right now. So I have a lower time frame chart. There's a lot. So I have point and figure, 500 tick, every kind of periodicity. The good thing about this is, like, again, everything is connected already. So I could open up a DOM and it's linked right to the chart, and I can link it to right where price is. So you'll see that the DOM and price are going to stick together, and that's, I think, useful for these footprint charts especially. So it reminds me of just trading equity index futures back in the day, and this was one of the things, this was one of the ways that it was set up, or how I had it set up. But I also, at the time, I had DOMs for other products open to see inter-product relationships. But this is a very nice platform. So this is my lower time frame chart. This should be, I have that popped open. 30-minute chart with profiles, open, close, high of day, low of day. Every kind of indicator you can imagine, you could add to this. Here's our profile, similar to Sierra. And then here are all the markets that I'm looking at right now. And very easily, I could attach all of these, right? Link them all and switch between them just as fast. Right, so if I'm looking at, I want to take a look at, again, the NASDAQ. I change it on my footprint chart right away. I think you get the idea. Very happy with this decision, though. XO is good. I preferred Sierra. I got back to Sierra. I used to use Sierra back in the day. So I've kind of just gone back to the roots with everything. Except I haven't gone back to TT. That would really be going back to roots. Any questions, guys? Big move up for ETH. That's awesome. Ooh, that's kind of exhaustive, eh? Well, that's thin, right? Not much took place up there up top. Here's a better view of it. So here's actually a good example of what would be excess in the profile and non-excess in the volume profile. So there's probably a good amount. This was a combination of stops being ran, right above this level, and 2 longs opening up into that gap. So I would just be careful right here because we're kind of right at the threshold, because it is the area where you would expect a trap to occur. And again, same thing happening with BTC. Look at the profile versus the actual price action. The amount of volume that's come in up there. See, there's a lot of buying. And we've had a strong morning so far, so it's not bad. One sec. Just wouldn't go chasing anything. You still have to be really smart right now, right? I'm just closing out my ETH long, so you probably heard that noise in the background. Add a little bit of a hedge again. I'm just removing some positioning. You couldn't see it because it was off the screen. So, all right, guys. Listen, the minimum trading experience, there is none. I think I'm going to host a private stream. So for anyone who joins my team, I'm going to host a private stream, go over a little bit of, I think, what I would say tricks. They're not tricks, right? Things I think that could be helpful for anyone who is going to be trading and scalping for the competition. Basic stuff like setting up an order already, like being long or short, so that you can set a TP in advance but not be fully committed to any position. So longing one contract, shorting one contract, and with that open, you could set a TP and a stop loss before you even commit to the full position. Once you add to the full position with an OCO order, it'll adjust the stop loss, it'll adjust to take profit. It's a way of just having the stuff set up before you're actually in position. So there'd be a few things that I think are worth kind of going over, just simple tips and tricks. And I'll probably host a stream kind of last minute before the competition starts. The name of the game with competitions for everybody is high leverage, small account value to start, and trying to catch extremes for the most part. The team link is in the description below. So click the link in the description below for Phemex, go to tournament, and my team name is The Stable. That is an awesome move. Getting towards range extremes though, so just keep that in mind. 20,003 is what I said would be an area to take profit. Reevaluate above 20,005, 20,006. Be careful chasing anything. Like I said, you just heard me a second ago closing out my ETH positioning. So that was from here to where we are now. And the reason I did that was because we had a little bit of a stop run and a blow off. And I don't think, like I said, that too much is changing right now. I think this is good, but the danger is getting very excited, not sort of tempering expectations and your emotions, and then again getting hurt during the bear market during a good time. So you want to be able to take advantage of the good times, be around for them, and not give back during them. And you just have to really approach it with measured emotions. See, there's that stop run beginning. The closer we get to the closer we get to 20,005, the more likely this thing squeezes. Some shorts being liquidated there. And ETH, I think it's going to be more drastic. Oh, yeah. So, wouldn't be surprised if we see a significant amount hunted. Listen, it's been really crappy lately. But the tighter it gets, the more... I said this the last time, the happier you should get, because this cannot continue. And if it did, you should still become more and more excited, because one, your extremes are tighter, so your reasoning to get involved becomes much more close in proximity. Or I should just say proximal, right? Is that the right way to put it? And you know that when it does change, it's going to have lasting follow through. So it's unlikely that if we break up or down, that it just kind of ends immediately. You at least get, I would assume, and this is just, you're going to think that from this I'm extrapolating like a $10,000 move. I'm just talking about like 1,000 point, 2,000 point moves. I mean, big picture wise, I haven't changed my mind that the market is in the process of bottoming. But for me, that doesn't mean that the market can't come down here first 2,000 points and then continue up. I'm just not saying, I'm not one of those people right now who's talking about sub 10K. And I'm also not one of those people right now who's talking about, you know, breaking above 36 before we get there, or any level really. It's all the levels are so cleanly defined, and being in a bear market, I think you have to show them respect. So if we're above 25, that's awesome. But the fact that we would even be able to get there, or even be able to get to 22, I think is worth celebrating either way, because we haven't done shit for the last couple of weeks. Thoughts on Sol? It's weak, right? I mean, look at it versus BTC the last few weeks versus ETH. I think also pumped significantly and the beta will return, but I'm not really that focused on them right now. I think most of the attention should be on BTC and ETH, honestly. All right, guys, I'm probably going to wrap it up. It's been about an hour, right? It's been a good stream. Unless you have any other questions. Yeah, that was an awesome move by ETH. I mean, actually, let's just take a look at something real quick. Ah, fuck it. I don't feel like doing that. All right, guys. Have a fantastic evening. I will probably go live again one day this week. Be sure to check out Phemex. You could use tradephemex.com. Or there's a link below that I think should take you directly to the tournament page. If not, there's a link in this chat somewhere that I shared.